Howdy ho, chaps. How you doing? Nice to have you with us on this Thursday, the 21st of March, 2019. It is a few hours out from the weekend, but there's a whole lot to happen before that takes place. Not least of which, pound front and centre today. It's all about sterling. So let's take a quick look at the Forex Factory and see what we can expect, shall we? I better share my screen first. That's probably a bloody good idea.
Good start.
Went
Yeah.
through the show when Ash wasn't with me, talking to a black screen, which is pretty crazy. Ash is with us, of course. He's landed in Singapore, and they've cleared a path for him to get from the airport to his hotel, and he'll be with us very, very shortly. Okay, let's backtrack a little, shall we, and see what happened yesterday. Well, we had the we had the Federal Open Market Committee, or the Fed for short, doing its stuff, and I left you with the breakout trade, guys. Sadly, the position on which you would have entered the breakout trade was not acceptable. If you entered, great, but you shouldn't have, is what I'm saying. And I'll go through that a little bit later. And what a shame, it was a ball terror, absolute gorgeous breakouts that the Fed promoted.
Oh yeah, I want to hear about that.
And of course, that was brought about by well, not that it was unexpected, the dovish tone from Jerome Powell. And the market really gave it to him. You know, it really said that's not acceptable, or maybe it is acceptable. Depends on which way you look at it, I guess. Certainly, I would have thought, and I guess it does open a few questions. Are they reacting to market forces? Answer: yes, I'd say there's a tick to that. Are they bowing to the Donald? Is another question. Don't know. You wouldn't like to think so, would you? And I'm sure they would deny that, as would every commentator around the place. But Donald's put the pressure on, and look what happens. He gets his lower dollar instantly. What a man. Okay, so that was yesterday. We had Theresa May speaking. Got no idea what she said because I was sounder at that time. I had my feet the same level as my head, and I was making weird noises, I think. The GDP figure came out of Kiwi overnight for most, and bang on the forecast. I don't know what Kiwi's done since then because they don't trade it too much, but we'll probably take a look at that throughout the course of the session as well. Poor old Aussie has had a bugger of a week in terms of news. A little bit of good news though. For the first time, I think since around about 2011 maybe, we've snuck below 5% unemployment rate, which is of course following the worldwide trend of, I won't say full employment, but getting towards that level. We saw, of course, on the UK employment figure on Tuesday that was absolute record. Never ever have they had that many people in work at the one time. And of course, the unemployment rate was quite good as well. So that continues the worldwide trend, and there's no sign of that slowing down, which I guess is a damn good thing. Later on today, we of course have the interest rates coming out of Switzerland, and the press conference and associated statement to go with that. And then, of course, it's over to, well, when I say later on, that's out now-ish, in about an hour. 52 minutes to be precise. And half an hour after that, half an hour after the press conference, at 9:30 GMT, we have the first of a big day in sterling, as I said, with retail sales coming out, tipped to be poor. And of course, we have the EU summit going on today, at which I think they're having a vote. Ash will fill us in on that, I'm sure, in just a tick. And then the Monetary Policy Committee, front and centre, widely tipped to vote no change, and it will be highly anticipated that will be the case. And of course, that will wrap things up for the day pretty much. we go into tomorrow with all the manufacturing, pardon me, news, and the CAD, its turn with CPI and retail sales coming out tomorrow. So it's a big end of week. No matter which way you look at it, what's the market thinking at the moment? Let's take a squiz at that, shall we? Well, different to what we saw yesterday, and of course, when you've had a big news release, you would expect that to be the case, and it certainly is. You can see that the dollar has just come off dramatically, except the pound at the moment. The pound is yielding to the dollar, which is kind of weird, but we did anticipate that yesterday, given that it really did need a good number to override the bad news that it had early in the week. Outside of that, you can see that the commodity currencies are doing well against the dollar. The yen is doing particularly well against the pound and the dollar. Yet the Aussie is pretty buoyant. Interesting that the Aussie and the Kiwi are outperforming just about everything else on the chart.
Well, do you know what, mate? On the Aussie,
on currencies. So maybe we need to take that into today's trading.
Can you hear me all right?
Tales of woe. I'm just woke up this morning totally frustrated.
Hello?
Because just about everything that was foreseen within my two eyes had happened, not least of this one, which was this one. And I'll only go through this, and then we'll go to Ash, because he's in a trade, and maybe he can talk us into that one. So we were looking all week for the Aussie to come down and test the weekly pivot, and then go and test the monthly pivot. Well, look at that. How did we miss those, 10 pips? How did we miss that? How did we get into the trade? Well, that's why I'm so frustrated. I actually didn't get into the trade. The only way into that, or two ways into that for me, would have been to place a limit entry order at the weekly pivot with the stop down here somewhere, and then I could have played the false break, which is pretty clear there, at that candle, placing the order above there. Problem with that was at 0500 this morning, my time, and that's the Fed at the very same time. So just no way for me to get into that. Frustrating as all get out, because it was just one of those things you see, and didn't happen. Bugger damn. Oh, just quickly before I do go to Ash, there's that breakout. We were nestled in here yesterday, and those of us in the show at the time I was going through this said to place your entry order right about here for the long, and your entry order right about here for the short, and this is your stop for the long, this is your stop for the short. But I did say at the time, make sure that price is somewhere near this line right here, and with a couple of hours to go, that would have looked okay. But at news time, we were right here, and it's just too close. And the reason for that is, if there's any whipsaw, you're going to be in trouble here, and that's why I don't do it. But a beautiful breakout nonetheless, and take that one on board, guys. It's one worth doing. Big news events on. Rightio, speaking of big news events, Singapore's having to entertain Ash for the next few days. So let's go there right now and say g'day to Ash. How are you, mate?
I'm good, mate, but I don't think you can hear me. Which you can't.
He's not even with us. He was with me a while back.
I am, I'm with you.
Ash, you there? I can see your chart, but I can't hear you.
You can't hear me. Okay, let's just check whether that's me or you. Hold on, I can't do anything with this. Problem is, I can't look on our YouTube channel. I don't know whether it's me or you, mate. Unfortunately, and nobody's going to see my messages. Okay.
There's an issue somewhere. Guys in the room, could you assist here by telling us who you can hear and who you can't? You can hear both of us. Wow. Okay. Ash, I'll shut up
Okay.
You can start talk, or you can continue to talk, and I'll try and work out what's happening by end.
Okay. All right. Well, let's start then by looking at the trade. So I'm in a trade short here. Now mine's on the FTSE futures, but let me bring you. Well, let's talk about the FTSE futures first, because that's actually no, it won't matter. Let's go with the UK 100. Now my short is at 73.23 on the UK 100. You won't see it on this this chart because I trade the futures instead, which if I can find, I'll quickly show you, but I'll just try and put it into your language for you guys. Yeah, so this is my trade here. So just a little bit away from where we are now, about 10 pips or so. Yeah, about 10 pips away from where we are now. I entered a little bit earlier than today, obviously. So in fact, I was in yesterday. So 10 pips from this point. I thought this was at 23. I think pretty sure this was at 23. So this yeah, somewhere around about this point here. But it's still relevant, it's still valid. But let's have a look at this chart first of all and see what we've got. Now the first thing is this trend line. Now until that trend line gets broken down, this is not breaking down. So it might end up being a trade that that just continues to hold support. Now, if that's the case, we may get some kind of indication in this point that that the trade is going in the opposite direction, and at that point, I will flip positions. Now, what I will want to see is the market come down to this point and somehow create some sort of uptrend on the hourly. At this stage, you can see that the hourly is just in this little downward movement here. So for the uptrend, so for the hourly to create some sort of uptrend at this particular stage, it's got to get through whatever this level is here. So now we want it to dive down and then this to become the new level. And if that's the case, the market will go up, potentially pop back. And if it pops back, then we can take the first trade off at a slight profit and then into long here. Now we have to be careful because the market is on a tear. It's just going and going and going. You know, that's what we've seen. But this pause is quite interesting to me, and this is the reason that I've entered a short. And I'd quite like to see this short come all the way back down to around about this point here. So I am looking for. All right, just coming back in. I am looking for just probably around about 70 to 80 pips I'm looking for. So that's going to be the target down there. Well, I can't see if you guys are leaving me messages because I've only got one screen as I've got this laptop. But that's somewhere around about 72.42 will be the target. This is a pretty sloppy looking distribution pattern, but you can see that there is some distribution going on here. Now, you don't need to call a distribution pattern anything. You don't even have to call it a distribution pattern. What's important to recognize is that the market has changed at this particular point, and changed from this. So we've got what we've got right now. I mean, this is the reason that I'm looking for a short. This astonishing parabolic move in the market to the upside. It just did not want to come back. It was just going and going and going, and that does usually suggest that that there will be something of a move to the downside to kind of let everybody else get back on board. So that's why I'm looking for the short, and then in this area I'll be looking for the long. It might come down a little bit lower, but it'll be somewhere around about this area. I'll be looking for the long. That weekly pivot is very, very unlikely to be tested at all now this week. We're on Thursday, and it's going to take some pretty huge events for this to come down here. So let's now consider the news. Now, the first thing is the Bank of England. As Jeff has just shown us, we have Bank of England announcements today. Now, it's unlikely that the Bank of England are going to suggest that they are all of a sudden hawkish. And if they do become hawkish, then that will change the mood with the FTSE 100. You know, the FTSE 100 will all of a sudden start to ease to the downside or even tank to the downside because they're not expecting something like that. And an interest rate rise, making the pound sterling more expensive, will likely make stocks a lot cheaper. So that's one of the reasons. Now, the other reason is that we've just had this rate hike this announcement that there won't be a rate hike this year, and the Fed is all of a sudden a lot more dovish on the the market, and less likely now to raise interest rates. Now that should be positive stocks. You know, when you hear an announcement like that, that should be positive stock. So when we consider all the different aspects that can make a stock market rally or move in the opposite direction, then it would be to do with the central bank. That could be one of the things. The other thing is obviously geopolitics, but the other thing is to do with central banks. So while the central banks have effectively gone on hold, then the market should really have taken another leg up here. Now, the fact that it didn't is a little bit, to me, that's a bit of an alert. So that's a warning sign. So with that as a warning sign, then I move on to some other things. You know, what is suppressing the market? Now, I don't know if it's open. It's opening in about 10 minutes. What's suppressing the market at this level? Now, of course, it could just start to pick up. And if that's the case, then I do want to be looking for the longs. But at this stage, I've got a market which is at a fairly significant high. When we bring this to the daily chart, you can see that there is a breakout here. So the breakout would suggest initially that this area could hold, but I'd like to see just a little bit lower, just down somewhere around there, or even a little bit lower, probably about that point there. So I am looking for a bit of a retracement before the market picks back up again. This area could well hold, and that might be it. But we do see the market at a breakout point. Then we saw this shooting star. Then we saw an indecision bar, and now we're just seeing how today goes. So I'd like to see this ease down. I've got a feeling that the China-America trade war drying up, if you like, of positivity will affect the market to the downside, and that's another reason that I'd like to take this short on. So I've got plenty of reasons for the short. Now, the long still exists because of, as just mentioned, the rate hikes. The lack of rate hikes and the softening from the central bank do actually suggest that the market's much more likely to go higher at some point than lower. And we're not looking at anything this year. And we were looking at 2 rate hikes this year, but now we're not looking at anything. So there's still a suggestion the market goes higher, and is now more of an idea, or more of a question of where it goes higher from. And I'm just not convinced it's this point. I think we've been on a bit of a tear. Let's look at the indicator down here as well, because this kind of tells us that the market is in overbought territory. There's no divergence there, so there's nothing that would suggest that this would be a place to kind of take on a longer term move to the downside. But by the same token, the overbought conditions means that this has become a fairly expensive market, which could embed, and an embedded indicator just becomes completely useless. And it might even be at that point now. 69.9, 70 on the RSI is when the market does actually start to embed. So anything above the 70 mark, this RSI will be considered to be embedded, and that can make the indicator a little bit redundant. So let's watch out for that, and just be aware that we might have to be looking at the long if it goes above this point. And ultimately, we know that the target is going to be off this weekly trend line up here, possibly off some weekly horizontal levels here. I can hear you now, Jeff. Another sort of reason that this is fairly high up here as well, when we kind of bring this area here. That price there at 72.80, bring that back to the daily chart. You can see that that's where the market stopped moving forward, and where this potential reversal bar, I should say, has driven us back down to again. So needs to get through 72.80, and I think if we do, then we'll have a little bit more downside into the 72.14 area. So looking for the short, and as I say, I've taken the short. If you guys are interested in that, I can't see your messages today, unfortunately, but if there are any other questions on that, then post them in. Jeff will read them, and we can get to those later on. Now, the pound